as we've grown, a couple things early on that's have really paid off now. I had this wild, crazy idea. It's going to shock you. I can see you're sitting down, so that's good. What if we grew a management company where people wanted to work there? What if we had a maintenance department where maintenance folks were knocking on our door to work alongside us because of the way we treat them, the culture we built? And luckily, I had some people come in early on, Jerry and Emily, that really took that baton and ran with it. I still don't know how I sold them on the dream sometimes, but luckily I was in the zone that day, and they believed in the vision. And those folks have continued to grow with us and help execute that vision. Because again, I can't do it myself.
Welcome to Elevate, the masterclass where we dissect the elements of exceptional achievement and lifestyle design with a focus on personal growth and real estate investing. Now, here's your host, Tyler Chesser.
Elevate Nation, welcome back. This is Tyler Chesser. I'm so thankful to have you here, and I'm blessed and grateful to be sitting with Ivan Barratt today. Today, you're going to learn how to design a culture that continues to compound and grow, and to design an organization, a company, and a real estate empire that lives beyond you, that makes impact beyond your input. And it creates so much opportunity for so many people. And I'm going to challenge you to take a moment and consider, how can you think bigger today? How can you ask bigger questions today? I want you to think about what it could be for you to go to your highest potential and exceed beyond the potential that you've ever considered for yourself. That's what you're going to find in today's episode. Today's episode is so good. Elevate Podcast, by the way, just as a reminder, is all about mindset, mind expansion, and personal development for high-performing real estate investors. Today is absolutely all of those categories. I'm your host, Tyler Chesser, and I'm a professional real estate investor and entrepreneur. It is my job to decode the stories, habits, and multifaceted expertise of world-class investors and other experts to help you elevate your performance and lifestyle. Are you ready to take it to another level? It is time. Let's raise the bar today. Let me tell you, the bar is going very high today, and you're going to find the capabilities that are within you that you didn't even realize. So when you start to employ some of the thought process that we talk about in today's episode, you're going to find that there's a new level for you. And there is no finish line. And I think you're going to love this conversation. Before we dive in, I want to ask you to pay the fee. The fee is to pay it forward and share this episode with one person. That's it. Even if you've done that in the past, I just want to thank you so much for doing that. The only way that we can continue to grow is through your personal introductions, your personal referrals. It means the world to me. It means the world to us. And we don't ask you to pay anything to listen to this podcast. We're grateful for your time and your attention, because you know what, that is scarce, and it's a scarce resource. But at the end of the day, we care about you, and we ask that you pay it forward by sharing this episode with a friend, and perhaps someone, maybe that you just met, or maybe someone that you've known for a very, very long time. Share this episode with them, and also give us a rating or review or subscribe to Elevate Podcasts and wherever it is that you listen or watch podcasts, because we are going to continue to bring massive value. Today's really is such a good conversation, and something that I think you're going to find tremendous value from. So with that said, I want to introduce you to Ivan Barratt, who is a multifamily owner, manager, and syndicator who specializes in large apartment communities in the Midwest. Since 2015, Ivan Barratt has raised nearly $400 million in equity, acquired over 6,300 units, and acquired over $1 billion in assets under management. His company, the BAM Companies, has grown to a best-in-class 5-time Inc. 5000, close to 6. It's probably going to happen this year, it sounds like, 6-time. And it is a private equity and management firm. Today, Ivan focuses his time on equity finance, acquisitions, and company strategy. So without further ado, please enjoy this outstanding discussion with Ivan Barratt. Ivan Barratt, welcome to Elevate, my friend. How you doing?
Tyler, it is so good to be here, man. Thanks for having me. Happy Friday here, April, whatever day it is, April 14th.
Absolutely, man. It is, it's funny. I always feel that there's a Friday energy. Like you and I
Oh
feel
yeah.
like we probably share this to a large degree. We love our work, but there's something about a Friday, no matter what. I mean, no matter what stage of your life, there's something enjoyable about a Friday morning. So I'm excited to share that with you. And I'm excited to introduce you to Elevate Nation. And you and I have known each other for a few years now. And, of course, we're right up the road from each other and obviously have a lot in common and many differences as well. But I'm excited to introduce you to Elevate Nation. So why don't you talk a little bit about yourself and maybe talk about your background, your upbringing, and so forth, and try to do your best there to bring us up to speed on who Ivan Barratt is.
Yeah, happy to do it. You look at our company today, 130 some employees, we've done over $1 billion in transactions, raised almost 400 million in equity, and haven't done that co-sponsoring deals. I've done it basically with my business partner and growing a network of high net worth and ultra high net worth investors. I get to have a lot of fun. Life looks pretty darn good most of the time. But that all started with a duplex, house hacking a duplex, man. And going through 2008, being overweight, being negative net worth, really questioning a lot about life. And there's just a whole journey there from starting from the bottom to where we're at now. So, way back, I'm lucky. My dad is an attorney, and he had rental properties growing up, and he would force my brother and I to be his landscaping arm, like all spring and summer, waking us up to mow yards, pull weeds, rake leaves in the fall. I mean, utter hell for literally, like, I'm like 7 years old when this started, and but it did a few things. It provided a disdain for manual labor. I said, heck no, I'm getting educated. I'm not going to be doing this the rest of my life. It planted a seed. I didn't know it at the time, but it planted a seed for income property. And in 1996, I graduated high school. That was the same year Rich Dad Poor Dad came out. He gave me that book, the audio version, because my dad was into audiobooks before they were downloadable. They were on tape back then. This is before CDs even. I always knew that I wanted to be an entrepreneur, to sort of march to the beat of my own drum. Real estate seemed like a great idea, right? Why not just own a lot of rental properties, watch the rent checks come in and do whatever I wanted to do. Of course, turns out it's a real job. 2008-9 was a really rough time. I'd been in real estate for almost 10 years at that point, working for my mentor in the development game. Thought I was pretty hot stuff, thought I knew everything, thought I knew real estate. Turns out I was what I would call a real estate cowboy. I was low man on the totem pole. And so when we would develop and sell things, I would get a fee. I was an unpaid person. I got my foot in the door with him saying, I want to work to learn. I'll work for free. And of course, he took care of me and would pay me when I was able to sell land and condominiums and other developments that he was doing. And of course, I'm adding that all up, and I was going to be a millionaire. And then 2008 hits, and all those deals literally go poof. He was fine. He's a very conservative guy. Didn't make a lot of money in those years, but I find myself, negative cash flow and negative net worth because I had built this lifestyle basically, on the come, that these deals would all come to fruition and I would make all this money. And, I was on Easy Street. And at the same time, I'm trying to convince my wife now of, it's like 13, 14 years now. My wife, 3 kids. I'm trying to convince her that I'm a good prospect. And, I'll never forget, man. She's like, hey, you're about 200 grand in debt. We're negative $5,000 a month in cash flow. Would you marry me if that was my situation? I answered honestly. I'm like, gosh, I don't think so. But here's how we're going to get out of it. We ended up moving out of a very expensive condo that I couldn't afford, back into that duplex that I had bought. We squeezed out of 2,000 square feet into a little over 700 square feet, buying shoes at Walmart. And at the very bottom, I would drive 45 minutes from my house to deliver pizzas in a town where I prayed no one would recognize me. Now, that was a very humbling experience. That was the bottom of the barrel. And that was a lot of humble pie. And that's when I realized, I wanted to stay in real estate. And that's when I realized that I would have to do what I hate to get to do what I love. And that's when I started property management, serving other investors by managing their tenants and their toilets.
Wow. What an amazing background story. Sometimes I always flinch when I ask that question because I'm like, I kind of feel like I'm putting this guest in a bit of a challenging position to be able to describe their background and upbringing because there's a lot to pack in there, but I think you just painted a very, very clear picture about your journey in real estate and really how you got there, which I think is amazing. And, there's so much to unpack, but one of the things that you were telling me about, and you really shared within the story, is that rock bottom that you experienced in the great financial crisis, which kind of required you to pivot because you wanted to, not only attract the woman of your dreams to become your wife, but you also had this desire. And it was almost this burning desire that you knew real estate was a path, even though you had gotten knocked back on your heels, you were still committed to the outcome of designing this life through real estate. And so was it the first real sort of pivot foray? Was it to downsize into that house hack duplex? Is that what it was?
Well, we had to get out of debt. And we had a condo that we just couldn't afford to stay in. And I remember renting that condo out at the time. Let's see, 2,000 square foot, very nice condo. It was one of the developments we did. And I bought the most expensive condo in there, right? And put every upgrade into it because it was just going to keep going up from there. And so we had to move out and rent it. And I'll never forget, for the first year or two, every month that nothing went wrong, we only owed another $600 to keep that thing going because we couldn't sell it. I didn't have the money to come to closing to write a check to sell it, and so we had to start digging ourselves out. So we buying shoes at Walmart, doing any kind of real estate deal I can get my hands on, a little bit of brokerage, helping investors buy property, sold some land for some folks, using those real estate skills that I learned to get some brokerage commissions coming in the door, even helping people buy their first home. And at the same time, I was starting to grow this little management business, onesie, twosie deals at a time. And also, looking for my own real estate deals with hard money. But as you know, our real estate's capital intensive. I could go out and search for properties and do a BRRRR, duplex, triplex, even did a 6-unit, right? But that would take a lot of time and a lot of energy. If I could convince Tyler, who owns, from California, who owns 2 single family homes or a couple duplexes, or a homeowner that can't move their home because nobody was buying homes at the time and they were renting them out. If I could help them manage their property, that was an additional $100, $200 of cash flow a month to my little business. So I could scale that much quicker. And I had this theory that if I could figure out the management game, then that would be my bridge to doing bigger deals. And so I got out of my own way and I said, I'm going to stop dreaming about doing these big apartment deals. And I'm just going to go find the next deal. No matter how big it is, the ones I was buying, as long as they were multifamily, which meant 2 units or more. And I would manage anything I could get my hands on where I didn't have to carry a gun. So I really started off managing A and B properties in areas where I knew I could attract residents that had good credit, because I knew if I had residents that cared about their credit, it would be easier to collect rents and that sort of thing. And that's how I started, man. It was a one-man show up until I had a bookkeeper that would come in because I didn't want to screw that up. But I was a one-man show for my first 70 or so doors, which were scattered all over the north side of Indianapolis.
That's a heck of an accomplishment. I mean, anybody who's listening who understands the nuances of property management knows that whether it's 7 doors or 70, I mean, being a one-man show is unbelievable.
It was a grind, man.
The first deal I ever purchased was 8 units, and it was overwhelming that I was self-managing. I mean, it was unbelievable. It was always almost all consuming. And now the fact that you had the foresight to manage only A and B properties, I'm sure helped. But, from there, from 0 to 70, it was just you. So then from there, I mean, what propelled you to kind of get larger and scale? Was it just natural and compounding sort of those relationships, or what happened?
Well, I always wanted the B quadrant business, as Rich Dad, Robert Kiyosaki defined it. I wanted to grow a business that I could literally walk away from and it would get bigger in my absence, right? And so I always had this vision of this big company. So at times I would try to ask myself, and then I would ask my team as the team grew, what would a big company do? Guys, we're not a small business. We're not a little business. We are a big company that just today happens to be small. And then that other thing I was talking about with you before we hit the record button, there's been all these punctuated points in this journey where I've had to remember what got me here won't get me there, won't get me to that next stage. It's gotten me here, but what do I need to do differently? What do I need to add? Who do I need to add? What do I need to cut out? Which is even more important in a lot of cases to get from this plateau that I've gotten to the next level.
So that is huge. And the fact that you asked that question, what would a big company do, even early on, is really fascinating and not one that I've heard very often, if in fact, maybe ever. So I love that you brought that up. And the question that you were asking yourself in your company when you had, maybe you brought on your first person, then you had 2 or 3 other people, and you were asking that question and really operating in the identity of a larger company. What did that help you do? I mean, it seems like it helped you build a team, right? Because you were focused on designing systems and personnel and resources. What else did that question get you at that point in time?
Well, a couple things that come to mind. It made it easier to realize that growing a team of people, managing, leading, hiring, firing over and over again. It was this realization that was going to be really freaking harder in many ways than the real estate itself. But in order to grow a big company, I've got to do that, right? There's no way to grow this kind of company without doing that, right? And how are you ever going to have a big business that you can walk away from if you don't figure out the people thing? For me, it's a fire, ready, aim kind of thing. Hey, I'm just going to start doing this and I'm going to learn as I go. I'm not going to sit back and try to figure out how to be the best at hiring people. I'm just going to start tinkering, experimenting, and making it work. And I've got so many more stories around people that I hired, but a few golden geese, a few great people came out of that. I've got one guy that's been with me now since straight out of college, and he didn't have any experience, but Ryan comes to me and, he's got a resume. I haven't even looked at it yet. I'm like, what'd you do this summer? He goes, well, I was the house manager at my fraternity and I had to move all these guys out of their rooms over the summer so that we could renovate the frat house. And I had to, herd all these cats. And I'm like, shh, say no more.
Good experience.
Right. And I think he just celebrated his 7th or 8th year with me now. And he's continued to grow with the company. The other thing about, what got me here won't get me there, asking myself, what would a big company do, is it really informs you, right? So when you start getting more revenue in the door in your opco, your operating company, it's not, okay, I'm going to go put that in my pocket. It's all right. Who am I going to hire next? Who's my next big hire? What's the next big system that can help propel our operating company? That's been the key to my success, is that growing that opco, that management company, and using that as the foundation and the infrastructure to grow a syndication firm out of that, and then using that syndication firm to get into the fund management business because of the track record we built there. So I'm sure there's cases out there, people skipping those steps, and more power to those who can. But for me, this was the journey. There were no shortcuts.
Talk to me about the mindset behind the thought of reinvesting continuously into your organization, into your systems, into your people, and in expanding your personnel. Talk to me about that mindset versus okay, we finally grew revenue to this point, so now let me go take a 3-week vacation, or let me go buy the new automobile, or let me do this, that, and the other. Talk to me about the difference there, because I think a lot of people, perhaps once they reach a certain level of success, it's like, okay, now it's time to celebrate. It's time to reap the rewards. It's time to enjoy the fruits of this labor. It almost seems like you had just such a bigger vision that you weren't still comfortable continuing to chase that bigger vision. But talk to me about the mindset there.
Gosh, yeah. The fire's been in my belly a long time, so I'll do my best here. But for me, it's always been that big business vision, right? And, I heard Warren Buffett, or I read Warren Buffett's, most recent letter. I think it was maybe the last, maybe Q4 of last year. And he said, for Berkshire, even though he's in his 90s now and Munger's older, he said, there is no finish line for Berkshire, right? This is an ongoing, beautiful organism of people that will continue to deliver value for its stakeholders. And for me, that's the mindset and the kind of company that I want to grow, that really outlives me. I want to be well thought of. It feels like it's part of my purpose to grow something that could make huge impact like this. And so that's stuck with me for a long time. So it's made it an easier decision to delay my own gratification early on and continue to reinvest. Good for you and me and other people in this business is that I still get some liquidity events along the way when we execute a real estate sale, right? When we go one lap around full circle on a deal. I could take that and spend it all. I don't. I do like spending on travel and experiences for my family, but to continue to compound that wealth now just seems common sense to me from my experience.
Yeah, that concept of there is no finish line. I love applying that to your business and thinking about how can it be intergenerational, beyond just yourself and leaving really a legacy and something that truly outlives you, and it's creating impact without you. Because a lot of times I think we perhaps think too small when we think about our impact, because it has to be directly correlated to our own direct efforts on a continual basis. That is not sustainable. It's obviously not sustainable in the long run. And, I was telling you this week was a huge reminder to me that life is short. And, when you think big like that, you can make tremendous impact whether you are there or not. And I think that that is an amazing calling card. By the way, the other thing too is there's no finish line for us personally either, right? We can continue to grow. There's always another level. Well, I want to go back to the concept of fire, ready, aim, because it really resonates with me. Yeah. But I know that a lot of others, perhaps they're on the opposite end of that spectrum. It's like, wait a minute, we got to aim, we got to get ready, we got to think about all the steps, we got to consider all the alternatives. I mean, talk to me about that and how that has served you and how you've navigated with that concept in mind.
Well, I think you need both. And, big shout out to my business partner, Adam Barratt, yin to my yang, the peanut butter to my jelly sandwich. I'm the visionary, he's the integrator. I'm the gas, he's the brake. For the 8 out of 10 ideas that aren't good, he's my BS barometer. So you need both. So I would tell people out there, hey, if you're not the fire, ready, aim guy, if you're more the operator side of it, you got to go find your visionary, go find your partner. Right. And if you're looking for a great partner, figure out how to be a great partner. Adam, if he were on his own, instead of transacting 6,000 units, he might be at 1,000 over these last 10 years. And if I were on my own, it would have imploded years ago. So there's very few people in this world that can be both. A lot of people think they can, but most shouldn't. And so by combining our strengths that are already, we're born with to some degree, right? The gifts that we've been giving, by combining those gifts, what's the saying here? The whole is greater than the sum of the parts. And so know thyself, right? You might be a fire, ready, aim guy like me. You're going to need a great operator if you want to grow a big business.
That is a really good piece. I just continually find how important self-awareness is, not only in just, living a life of fulfillment, but also if you want to achieve, greater levels of success, it's knowing your strengths, knowing your weaknesses, and going deeper into your strengths and finding people to surround you with the weaknesses or overcoming the weaknesses that you have, right? And you're talking about.
Listen, I've got a marriage I've got to protect. I've got faith. I've got kids that I'm trying to raise well. Right. I want to be spiritually and physically fit. That doesn't leave a lot of time left, and so most of my effort beyond that really goes to BAM, and I can make so much impact there. But I can't work harder. I have passed the point to which I can work any harder, past that point a long time ago. Right. So just like you said, now I've got to lean into what I do best. And I often will tell entrepreneurs this. I love talking with entrepreneurs and business owners. If you're at this stage where if you're not having more fun, the bigger the company is getting, something is wrong.
I love that. One of the things you were talking about is you don't have any ability to work any harder now, right? And I think that this is a huge concept. It's such an important concept because some people, as they continue to get more successful, it's just like, all right, well, we've got to just work longer. We've got to work harder. We've got to, just by the grit of our teeth, we've just got to keep doing it. We've got to sacrifice all of these other things. But, what I've recognized, and it sounds like what you've truly lived, is that it is about working smarter and going deeper, being higher quality rather than more quantity. Could you talk a little bit more about what that has looked like and what it actually looks like for you today?
Yeah, I mean, it's a little cliche, right? But it's a cliche for a reason, because it's true. I'll go back to, I remember just qualifying for EO, Entrepreneurs Organization, one of the first peer groups I joined, which we don't get to it, Elevate Nation out there, peer groups, coaching, mentoring, rocket fuel. But I just qualified for EO. I'm making barely $1 million a year in my business, and that's revenue. That's not profit. And I'm working hard. I'm 50 pounds heavier than I am today. I give myself maybe a C in marriage and maybe a C minus and being a young dad. Dad of I think I had a couple babies by then, and I was hitting a wall. Right. And so I had to force myself again to say, what's going on here? What got me here is not going to get me to where I'm going. Right. And so I had to really do a lot of internal accounting on where I was failing. Right. I was taking on too much. I'd slipped and let myself, just work all the time. Right. I wasn't working out. which was increasing my stress level, right? So I'm not as fun to be around nights and weekends with my young marriage and my little kids. And really, it was just this period where I realized again that what got me there won't get me where I needed to go. And being in that peer group and then quickly realizing I needed an accountability coach. There's a difference there between a peer group and having a cadence with a coach, and getting somebody else in my corner, saying, in a nice way, hey, dummy, we've been talking about this now for a few weeks. What little steps are you taking to rectify this situation? And so, okay, so let's get this, what's this next step? Well, I'm gonna post this new job. I'm gonna search out. A lot of it comes down to people. You probably heard me say it before, maybe from stage or on another podcast. The people are more important than the real estate. Anybody can go buy a real estate deal and screw it up pretty quick. It's the people in the organization, the culture, the leadership, and on down the org chart that really makes the difference if I'm trying to grow an organization that can bloom and grow and survive without me. Tyler, it's almost like having a fourth kid, right? And it takes a lot of work to raise that kid, but over time you see it mature and you see it start making its own decisions. It still makes mistakes, and sometimes it's hard to let those mistakes happen because it costs the owner money, right? But through those mistakes come growth.
Now, when you think about finding those right people, if you were to look back, because you mentioned you found some golden geese, some amazing individuals who are continuing to improve. They're continuing to find that there's no finish line for their own personal, professional lifestyle and, their own path, which obviously adds tremendous value to your organization. And they're creating impact through this organization as well. What is the difference, or what have you found? What have been sort of some of the big aha moments that what got you there didn't get you here, and you've made some pivots and some changes in terms of finding the right people? What would you sort of give your younger self advice on in terms of finding the right people for your team?
Well, there's again, it's the fire ready aim. So not trying to figure it all out ahead of doing it. Sometimes you just got to get in the gym and try to figure it out. As we've grown, a couple things early on that's have really paid off now. I had this wild, crazy idea. It's going to shock you. I can see you're sitting down, so that's good. What if we grew a management company where people wanted to work there? What if we had a maintenance department where maintenance folks were knocking on our door to work alongside us because of the way we treat them, the culture we built? And luckily, I had some people come in early on, Jerry and Emily, that really took that baton and ran with it. I still don't know how I sold them on the dream sometimes, but luckily I was in the zone that day, and they believed in the vision. And those folks have continued to grow with us and help execute that vision. Because again, I can't do it myself. I'm great at coming up with the idea and helping to set the course, but the operations and the day-to-day technicalities, I need people around me that also buy into that and can support that part of the formula. As we've grown, we've figured out our core values as a group. They're not aspirational. They're who we are. We do a lot of work on hiring to those core values. My favorite one is when people grow, BAM grows. And that's been at the root of a lot of our success. Sure, we've had to bring in some heavy hitters from outside, but it's been so fun to watch so many people in this organization grow with us. Personality testing, multiple interviews nowadays, really being intentional up front about who we let in here, weeding out the C and D players because A players don't want to be on the floor with B and C players, right? And being a little ruthless with that.
So it sounds like to attract exceptional people, we need to focus on the word attract, right? We need to understand what sort of culture we are building, and we are putting people in the position to build on our behalf, right? When you think about that culture, it starts with some of the vision, but then it comes down to how do you live? How do you work? How do you, what is the reputation of your brand, right?
You ready for another secret, not so secret?
Absolutely.
So on the property management side, it's a very low margin business. At best, you've got like the margins of a restaurant, maybe 10%, 12% profit margin. What we've done at BAM is we take that 10 or 12%, and instead of being miserly with it, we reinvest in our people. We do really good work around corporate events, site events. We bring in everybody from every site around the Midwest for a big blowout Christmas party. Bring your plus one, we put you up in a nice hotel. plated dinner. It's almost like a expensive freaking wedding, right? And we do a few other little things throughout the year. We take care of people. You know, we're another core value. We're a loyal, loving family. Now, sure, sometimes you got to kick family members out, but you know, people that are loyal to us, we're loyal to them, and that's why we didn't have hiring problems in maintenance throughout COVID and throughout this tight labor market. It's because people want to work here, and it's very satisfying driving by an apartment community, and we see it all the time. They got a sign out front, you know, now hiring maintenance. And it just makes me smile that we don't have those issues. If you want to grow a big business, I feel like you've really got to take that seriously. And you've got to find the people that also take culture seriously. And you've got to live it. And now what's really fun, Tyler, is, you know, I get these stories, right? Where, hey, you know, so-and-so's son died from an overdose at age 21, and we're picking up the funeral tab. And nobody comes to me and says, hey, can we do that? Because they already know what the core value is. They don't have to come to me for that decision. They already know what the right decision is. And it's just such a warm feeling seeing that in action.
That is really cool, you know, because some people may think, well, wait a minute, you know, you're letting go of the small margin there. It's like, it's such a small margin already. Why wouldn't you, you know, try to at least take some off the table, right? Because, you know, I can understand sort of that initial thought process, but what you've just described is the abundance mindset.
Well, where's the real wealth driven anyway in our business, right? It's the value creation in the real estate, in the businesses we buy. The businesses just happen to be apartments, right? So I'm going to spend more money to make sure my management team, from, you know, all the way up to the chief investment officer and everyone else at corporate, all the way down to the person picking up trash at the site, is well taken care of. It's, again, when I look at it this way, it seems like the only way to do it. It seems common sense.
Yeah, I agree. This is great stuff. When I think about attraction, I think about not only team in sort of within the organization, but I also think of facing the marketplace. And, you know, another thing that you guys have been able to do over the years is build a brand with a powerful reputation in the marketplace, which is compounding in terms of new opportunities, obviously facing, you know, the wealth creation opportunities in terms of these real estate investments, which obviously you guys have been tremendously successful in raising $400 million of equity and acquiring 1.2 billion or so in real estate assets today. So talk to me about the components of building a powerful brand that has that type of reputation in the marketplace, not only to be successful from an equity raising perspective, but also a deal sourcing and transactional perspective.
Yeah, I'm going to answer that one way. And if I miss what you want to hear, tell me and I'll try again. Yeah, it's really fun to see this now. And our track record's picked up so much momentum. It's just a blast now to see the type of investment we get. Our number 2 source of investment is referrals. Our number 1 source is repeat investors. It doesn't get built overnight, and it takes a lot of discipline on the front end. And it may not look like that to the outside world sometimes because of our growth. You know, we're going to hit the Inc. 5000 for the 6th year in a row. But what I would stress out there to the entrepreneurs and operators in your audience is that I could be so much bigger than I am now if I just would relax my acquisition criteria, right? And I know groups out there that have done this where, you know, they've got some deals in the 20s and the 30s, but they've also got some deals that did an 8 IRR or less, right? And they're bigger than me. But now I'm starting to come up against these guys, and I'm winning investors because although my track record might be smaller, $1 billion versus maybe 2 or 3 billion, it's audited and it's stronger because we haven't done bad deals. Not saying we'll never do one. The fund solves for that a little bit because if one underperforms, the other assets inside the fund can pull that up. So it's an advantage to the investor in that sense. I would suggest reading what really great investors that have come before me have done. Of course, Warren and Buffett and Munger. Howard Marks is another great one. You know, I don't read these real estate books anymore. I'm reading, how do these great investment organizations grow? How do the principals design their lives to have that long track record of consistent outsized returns? And I love what Howard Marks says, great guy to follow, Oaktree. You know, we can change a lot of things about what we buy. The one thing we can't change is what we paid for it. And in the second half of Warren's investment career, he's gone from, buying cheap assets for a cheap price to buying great assets for a fair price. And that's exactly what we look to do in apartments. We look for great assets that we can buy at a fair price, where we've got a high conviction that we can create value, mostly through better management, a little bit through physical improvements, and a little bit through picking markets and trying to figure out, where the puck is headed from a market perspective.
Hey guys, I want to remind you to check out CF Capital. CF Capital is the premier boutique real estate investment firm in the Midwest and Southeast region of the United States. We are a national real estate investment firm with a purpose. We provide property investment and asset management solutions to help passive investors maximize returns on high-value multifamily communities. But our investments go far beyond acquisitions. We invest in people. We are in the business of elevating communities and raising the bar for everyone within our ecosystem. CF Capital is a real estate investment firm focused on the acquisition and operation of multifamily assets. We confidently deliver tax-advantaged, stable cash flow and capital appreciation with a margin of safety. By investing alongside our team, investors can preserve and grow their wealth without having to deal with tenants, termites, or toilets. Investors come and stay for the outsized returns we create in our deals while appreciating the ancillary opportunity to make a bigger impact that only CF Capital can provide. If you're an investor and want to invest with us, here's how. Learn more about CF Capital at cfcapllc.com or by simply clicking the link in the show notes of this episode. We will see you on the inside of this powerful community, so let's elevate communities together. So it sounds like, and I was going to ask you, what are the patterns that you've observed for those other investment organizations that may or may not be related to real estate? And it sounds like perhaps a pattern, and I'd love to get your take on this, is value investing is the approach that is successful in the long term in terms of, okay, it's not about buying cheap, it's about acquiring value at perhaps, an attractive basis, and that's going to put you in a position to be successful. And obviously execution with your team, with your resources and systems. But is that one of the big patterns that you've observed and applied?
Big time. It's anything but easy, but it's very simple. Most of these concepts are quite simple, and if you get enough reps in, it's pretty simple to understand. It's just not easy to pull off, right? And a lot of folks take shortcuts or sacrifice or push the envelope. And right now we're seeing some of those folks and their investors, unfortunately, get vaporized. What I've noticed about these larger investors that have had a long-standing track record of consistent returns is patience, discipline. Warren calls it standing at the plate, waiting for the ball to hit that strike zone. You don't get 3 strikes. You can sit there for a long time and wait for the right pitch. I noticed a lot of these investors don't have hobbies. They are all in on their work, right? They have lives, right? They have wives, they have kids, but their passion in most cases is their work. When they're not working, they're reading a lot of information. That's some of the commonalities I'm seeing as I study the greats.
I love that. And, that resonates with me. And I know it resonates with a lot of our listeners, is really just continuing to learn. There is no finish line, like we talked about earlier. And, your brain and your mind is one of the most powerful tools, if not the most powerful tool that you have. So you've got to continue to invest in that. And I want to talk about some of those things that you're doing to invest in your mind. But I also, one of the pieces that you just talked about in some regards was designing a lifestyle, because, sometimes I feel like real estate entrepreneurs, we get caught up in this business. And to your point, you've got to have a certain level of passion that you're tremendously committed to it. You've got to be investing in yourself outside of when you're, operating with your teammates and, doing your thing. But talk to me about that lifestyle. And, because you even shared with me before we started recording today, you've got a little bit of a report card that you utilize to focus on how you're designing your lifestyle. Talk to me about that.
Yeah, absolutely. Report card's pretty simple, faith, marriage, kids, spiritual, physical fitness, and of course, the business. And that, I think I've got that pretty much in the right order. I'm not always saying I prioritize that in the right order. We all slip. But what I've found is if I focus on these other things that are really what's ultimately important, right? It doesn't matter how many zeros in the bank, by the time we maybe leave this existence, right? There's so many other things that matter. But if I focus on those, if I focus on having a great business, great people, great returns to our investors, the money is the byproduct, right? And so it's having that deeper why. I've heard it said, if your why doesn't make you cry, it's not a good enough why. And in simple terms, if you're going to the gym to get a six pack, you're likely going to give up when the going gets tough, right? But if you're going to the gym and if you're eating right because you want to dance at your great granddaughter's wedding, then that's going to keep you going when maybe you wake up and you don't want to work out, or you want to eat that fourth slice of pizza. That's like my kryptonite. So it's having that deeper why. I think I might have got off on a tangent here about what you wanted to hear from me. So redirect me if you need to, but that's my thoughts on a lot of that.
No, not at all. I think it's, keep what's most important. But I love that concept of, if your why doesn't make you cry, you should get another why. I mean, I've never heard that before.
I stole it from somebody else. I think it's the Motiversity guy on YouTube.
Okay.
I usually work out to Motiversity. I love it. It gets me going in the morning.
Yeah,
I'm pretty sure that's his. So shout out to Motiversity YouTube channel.
Ultimately, it comes down to, again, what is the purpose behind what you're doing right now? Rather, it's not just money, right? It should not be, in fact. And let's let money be the byproduct of creating transformation for other people, transforming ourselves, and continuing to do that, right? Because there's no finish line.
Yeah, and if I'm flying around in a G5 all by myself and my wife's left me and my kids hate me, right? And they're all spoiled brats, then what is all that money worth?
Exactly. Talk to me about your favorite ways of investing in yourself, because you just shared sort of the intentionality and the priorities in your life. Yeah. And I love that, just having the clarity of what's most important and, course correcting and reminding yourself of, hey, we need to make an adjustment here because I haven't been treating what's most important. So let me move in this direction, right? It's never perfect. But what are your favorite ways to invest in yourself? To continue to grow personally?
So I just personally spend well over 6 figures in coaching and personal growth, as well as the peer groups I'm in. And it really, so I guess the punchline is, any area of my life where I need help, I have a coach and or a peer group. Faith, business for sure. And I'm spending as much there on myself as executive coaching for my team, which has been rocket fuel to our growth. But also personal coaching. My wife and I have what I call a marriage coach. And because we're at a tough age with 3 little crazy kids that are going to be great humans one day, but right now can be pretty tough. And they're also vastly different. We have a child coach. We just got to hang out with her for 2 weeks on spring break, and we did all the spring break stuff as well, but we made it a dual trip, got some work done with the kids. I've got a personal trainer that's, at my house every morning going, come on, man, let's go, to keep me accountable there. So that's a lot of investment. I know not everybody can do that, but I think early on, getting in a peer group, I'm in some pretty cool networks now. And as we talked earlier, what gets me here won't get me there. I am consistently working to be a little fish in a bigger pond. So left that EO group when I outgrew it, left that YPO group when I outgrew it, in a new group now where it's uncomfortable and can be intimidating being a little fish, right, in a big pond. But once you get through that initial maybe intimidation or reticence, the education, the learning you get from being around titans of your industry is irreplaceable, man. It is amazing.
Yes. And I think it was Charlie Munger who talked about this in Poor Charlie's Almanac, but he talks about expanding.
If you can look over I'm mirrored. There it is.
Do you have it up there? You got it on? Oh, right, beautiful. Right, one of the greatest reads. It is, it's really just a lot of his talks over the years. And
audience, read this first. If you want to be a better investor, I don't know if you've seen this yet, Tyler, but it's gold, man. It's
Richer, Wiser, Happier by William Green.
Yep. It's like
awesome.
Several short biographies of some of the greats. And the last one in the book is Munger, but Buffett's in there, Templeton, Manish Prabhai, all these fund managers that have these long storied track records being interviewed about how they did what they did.
I love that. Thank you for sharing that. We'll put a link in the show notes as where the listeners can find that.
I interrupted you. What were you going to say about
No, and I just wanted to comment on, some of the thoughts that you were just sharing in terms of expanding your level of competency as well as your comfort zone. And Charlie Munger talks about that when you are on the edges of your competency, that's where you should really be playing, because if you want to expand the competency zone, you've got to push it. Right? You've got to surround yourself with other people who are going to give you the context and the tips. And you're also going to rub off on them. They're going to rub off on you. You're going to become more like them. But it sounds like that's kind of what you've been doing in so many regards over the past many years.
It gets my motor running. I can't put anything else on it, a finger on it, except that it gets my motor running. So I feel like I'm doing what I was designed to do, and using my gifts as well as I can. And if I can 10x this thing from here, then I can make 10x the impact that I would if I hung it up now and gave half of it away and played golf or something. I think I'd probably die sooner if I did that.
No question in my mind. You and I both. But one thing I'd love to know, and this is almost kind of even from a higher level, for you to get to where you've been, it's been about solving problems, right? It's been about finding solutions, getting creative, asking bigger questions. So I'd love to know where you are today. What is the biggest problem that you're solving now?
Oh man, yeah, it's still going from founder to firm. That's the exciting problem that I get to solve, right? It's how do I continue to build out a team that in many ways is better than I am, right? And they can continue to do this at a high level. So that's why I'm reading up on these titans of investment in all different disciplines, right? They're not all real estate guys. Most of them aren't. It's how did they build that organization? How did they find those people? It's tough, but it also gets my motor running, and it's a lot of fun, and it's not always two steps forward. It's not a straight line. It still revolves a lot around finding the right people. It's, hey, I could take this profit off the table now that the fund management, the capital management side of the business is making real money. It lost money for the first couple of years because we hired ahead of the revenue, right? Because we knew we would get there. And it's also just incredibly exciting to find these people that are coming in and others that are growing in the company. And that is the exciting problem, is how do we continue to grow a firm that can do this thing really, really well at a higher level, at a higher scale. And it's quite a challenge.
I think if the listeners did not recognize that you just automatically went to, it's an exciting problem. It's an exciting problem because we can look at our problems in one or two ways of, I'm the victim of this problem, right? I can't do this, or this is, blocking me, or, I'm just, oh my gosh, it's overwhelming. Or how exciting of the problem for me to gain the rewards and the gifts of this challenge, because that's when I get smarter. That's when I get, that's when I have the opportunity to pivot or change or adapt, right? Because what got me here isn't going to get me there.
And I want to say, before I forget, it just popped in my head. I don't want to miss this. Finding time to think is incredibly important. I'm not always great at this, and it's easy to slip back and grind, right? But finding the time to think. For example, my wife knows not to bother me when I'm in the shower. Sometimes I'll be in there for 20 or 30 minutes, just standing there, letting the water pour over me because I can't look at my phone. It's a nice, relaxing environment, but sometimes I'm just in there thinking, right? Peace and quiet thinking. And she used to try to bother me. I'm like, honey, I'm getting some really good thinking in here. Please wait till I get out.
It's cool to hear that. And I'm really glad that you brought that up, because we also employ EOS within our business. It sounds like you do as well. You were utilizing the terminology of visionary and integrator. And one of the tools within EOS that we hadn't started applying until a couple quarters ago was the concept of a clarity break. Taking some time away from the business and literally just writing and, journaling and, letting your stream of consciousness create clarity for you. And just giving us that space has allowed us to create tremendous breakthrough in our business.
I love that you brought up EOS. We've used it for years now. At some point, you have to add things on or sort of modify it or bring in other systems in addition to it, because it is a great way to level up, maybe even several levels. And it's certainly busted through a plateau or two for us. even EOS, right? At some point in the future, what got me here won't get me there. And you have to find other solutions as well. That's where we brought in, some other ideas and some other systems.
I love that. So what are the next 3 to 5 years hold? And this is kind of multi-dimensional question because it's for you, your organization, but also within the marketplace. I mean, because we're obviously going through a period of transition, right, in terms of the business cycle, and I'm understating drastically, obviously, what's occurring. But what do you see in terms of your outlook from here?
Yes, the next 5 years, it's still a lot about hiring a lot of the right people, and continue to reinvest in the organization and bringing in all stars from the outside, and also continuing to grow the leaders and those up and coming leaders under them. That's really the simple answer. As I said earlier, continuing to do these things that we do, which are only really one or two things, very, very well for our investors. From a market standpoint, I haven't been this excited since we locked down for COVID. Now, transaction volume is way down, but it's been a little bit easier to find an asset or two that makes sense. We're not seeing a lot of them because of transaction volume. And, I've got to go find another Des Moines, Iowa. I bought 1,200 units there over the last 2 years. That's going to be a great trade for us. But I got to go see where the puck is headed next. So I got to go find more emerging markets. We all know what those are. Right? We got to see where the value is coming. We got to beat the institutions there, because once they buy, it becomes harder. I'm buying a deal in Indianapolis for the first time in 2 years. I'm super pumped about that. As you study the greats, you'll see that these periods of pessimism and uncertainty and lack of liquidity are where some of the best deals can be found. And it's really freaking hard when the money's hard and the deals are easy. Right. But we all wish we had bought more in 2009 and 10. But I'll never forget being at a cocktail party with my parents in 2010. What would that have made me? Maybe 29, 30. And somebody asking me what I was doing. And I just said real estate. And they were like, "Oh, I'm so sorry to hear that." I'm like, to myself, I'm glad that people think it's a bad thing to invest in real estate. So there's opportunities in every market. Tyler, you and I both know this. For those that are willing to take the discipline to keep turning over rocks and kissing toads, I think the Midwest is going to continue to emerge. Right, not everybody's moving to the Sun Belt. We're getting a lot of reshoring, these mega trends that are only starting to occur. There's lots of states where you've got business-friendly, landlord-friendly climates. Indy, Louisville, you've got lots of infrastructure coming through there, serving a lot of the country. Will we expand out south and west, Midwest? Absolutely. There's one thing that I know for sure, and that's people are still going to need housing. The demographics for the U.S. are the best in the world. Second best, I believe, is Mexico. So we're going to see more economic partnerships with Mexico and Canada. If you haven't heard it before, Fortress North America will be here to stay for at least another 100 years. This continent has a lot going for it, and that's a whole nother podcast, but I won't get into it here. But yeah, very bullish. There's going to be some bumps in the road. I like bumps in the road. I like it because I built this company to do hopefully even a little bit better when things don't go according to plan. And then just to circle back to the beginning, I bought some of my best deals right at the beginning of lockdown, when people thought the world was going to fall apart and nobody was going to pay rent. And, other competitors were factoring in negative rent growth and sitting on the sidelines. My partner and I raised our hand and said, we're calling bullshit on that theory. And we kept buying, and it really paid off.
Ivan, this conversation is so fun because there's optimism oozing from all of the words that you're sharing with me in all aspects. And to your point, those bumps in the road, that's where opportunity exists. And I also love that you just planted that tiny little seed of recognizing the demographics of the United States of North America. For folks who are looking at all of the pessimism, all of the negative headlines, recognize that there are some underlying factors that are a tidal wave in so many great aspects as we move forward.
And audience, spoiler alert here. What do you think both sides of the aisle are going to do if we start having a population growth problem here in North America? we're going to open up the gates again. We're going to
Right.
figure out immigration. Population growth is good for everybody. We're going to figure out a way to let people in who we want to let in, right? Who want to come here for the American dream. There's so much tailwind. And, I know we've quoted Buffett a lot here, and I don't want to sound cliche, but Warren Buffett said it best: never bet against the USA.
Absolutely. Absolutely. Man, Ivan, I loved this conversation so much. And I feel like I could go for hours and hours and hours. I want to be respectful of your time.
We could make this a Joe Rogan podcast, couldn't we?
Hey, well, we got to get the bourbon out for that. So we'll do that next time. You'll come down to Louisville and we'll have that conversation. But before I let you go, I want to transition to the rapid fire section of the podcast. It's called the Rare Air Questionnaire. I mean, what you've described today is a bit of an uncommon approach, unfortunately.
Well, disclaimer here, Tyler did not give me these questions in advance. So, I'll do my best.
Hey, you know what? I want to keep you on your toes because it's Friday and I think you're ready for this. So,
and there's actually bourbon in my coffee. Just kidding.
Good man.
Only 10 o'clock here.
Now we can tell why you're having such a great morning. So with that said, we've already been talking about some books, but if you had to point to 2 or 3 of the most impactful books that you've read over the past 2-3 years or so, what would those be and why?
Give me a category.
I mean, it can be personal, professional, anything that has really changed the way that you think. And this is maybe a selfish way to ask this question. The best books, in my opinion, are things that make me change the way that I think. And when I start to see things differently, new opportunities emerge. So what about you?
Yeah, absolutely. I agree. You've got to keep an open, flexible mind. That's really important as an investor. Gosh, there's so many books to choose from. I mean, I could go Good to Great and Turning the Flywheel, which is this little book nobody's ever heard of, but the Good to Great guy Collins wrote.
Yeah, Jim Collins.
Really got me thinking again about what BAM's flywheel is. Howard Marks, Mastering the Market Cycle. I think I brought that up. Ray Dalio's got some good stuff, although I don't agree with everything Ray says. I'm literally trying to picture my library at home and some of the books that have most influenced me there.
I know it's always a little bit of a tough question because you're like me and you devour.
Yeah, so I don't want to go to the easy stuff like the Rich Dad, Poor Dad. Everybody says that one, although that was impactful. Man, Merchants of Debt. That one you can't even get on audiobook. That is about the rise of KKR, giant private equity company out there. That's a really great read about how they grew that business. That's an interesting one. And then I love economic financial history. There's a bunch of that out there. This one again is my favorite one of late.
That's Richer, Wiser, Happier again.
Yeah, I'm sure your whole audience has already read Traction. That I never
read. If they haven't,
I never read it, but I stuck it under my integrator's nose, and he was like, "Yeah, I think we need to do this." And I'm like, "Perfect," because every entrepreneur I was talking to was like, "Hey, man, you heard Traction yet?"
Yeah.
I think that's all I got right now, man.
Awesome, man. Well, you keep over delivering. I asked for 2 or 3.
We're going to disconnect here. I'm going to be like, I forgot about that one.
Well,
read 15 minutes a day at least.
Absolutely. That is a really good point. Sometimes let's lower the barrier, whether it's 15 minutes or 10 pages. I mean, there's no excuse.
And stop reading real estate books. If you've already syndicated a couple of deals, read about great investors in any asset class, financial history, self-improvement, growing an organization.
Psychology.
Stop looking at the shiny objects, right?
Yes.
If you're a business development guy like me and you're not the integrator, there's some great sales books out there. I would still say Grant Cardone, if you're not first, you're last. If you're out there trying to raise money, one investor at a time, that book is got some really good sales training in there. If I was still raising money personally, which I did for years, I would listen to sales training in the car just to keep that muscle strong.
I love that. Ivan, aside from what we've already talked about today, what's the biggest way that you elevate your life on a daily basis?
Ooh, biggest way on a daily basis right now. Really it's, and I'm not perfect at this by far, but mastering my morning. I kissing the kids goodbye to school, getting some reading in. I'm a big fan of cold plunging at age 44. It's like instant Advil for my body that seems to be a little more sore than it used to be. Getting some quiet time and some breath work. I try to do reading and thinking in the office, keeping things off my calendar most of the time in the mornings, although I I violated that for Tyler, everybody, because I couldn't wait to do this. I find when I master my morning around mindfulness and mindset and giving myself time to read and think, things tend to go better. And certainly physical activity to keep the stress level down for me is big.
Couldn't agree more, my friend. What's the biggest way that you elevate others around you?
Oh man, now a lot of it is growing my fruit on other people's trees, and I'm not always the best at it. I try to pour into others when I can. I love mentoring some people in my life, not for pay, but literally just helping others. Sometimes I find that if you're stuck, go help somebody else, and it seems to unstick things. And then my executive coach now that helps my team, she's been a fantastic extension of me in helping me develop my leadership team and coaching them and helping them on their path. She's a great extension of me, and she gets a lot of credit for that. And gosh, my leadership team and my partner, all those guys and gals are helping to grow their fruit on other people's trees. And that's how you grow a business.
Ivan, this has been so much fun. I just want to acknowledge you for your genuine care about investing in other people, for your willingness to continue to ask big questions of yourself, of your organization, and showing what is possible when you have this abundance mindset and mentality of, what got me here isn't going to get me there. And how can I become greater? How can I reach further to this finish line that doesn't really exist? So, man, I just wanted to acknowledge you. There's only, so much that I can really put into words here, but I think that you've shed an amazing example today. So do you have any parting thoughts or words of wisdom that you'd like to share with Elevate Nation?
Well, first, thank you, man, because it takes two to tango. And I haven't done a podcast in a while because it got sort of repetitive. And I knew this one wouldn't be. I knew we would talk about deeper things that are meaningful. And so we nailed it, dude. I have not been on a podcast I enjoyed this much in a long time, except for Whitney. You and Whitney are, 1A and 1B. He's also a fantastic interviewer. You guys just, you make me look good, both of you. Parting words of wisdom. There is no one important thing. Howard said it best. It's another good one here. The most important thing, he's got 15 or 16 most important things in here. It's an amalgamation of things. And guys, so much of this was not anything but just little decisions made well on a consistent basis daily. And it doesn't happen overnight, but before you know it, you're looking back and you're like, wow, we've come a long way in what others might call a short period of time.
Trust the process, right? Trust the process.
Love it, man. Trust the process. Absolutely.
Model success, man, because you don't have to do this alone. There's so many others who have paved the way.
Yeah, man. It's Kaizen, right? It's continuous improvement, just a little bit, and pushing that through the organization to everyone has made so much difference.
Ivan, tell the listeners where they can learn more about you and your company.
Oh man, my name is correct down here. Google Ivan Barratt, Barratt, or BAM Capital. I'm pretty easy to find.
Outstanding. We will put links in the show notes as where the listeners can find Ivan and BAM Capital as well. Ivan, until next time, I have a feeling there's going to be part 2 of this conversation.
I hope so, man. This is awesome.
Thank you again for making time. I really appreciate it.
Dude, the pleasure's mine, Tyler. Thank you.
Elevate Nation, what a great conversation with Ivan Barratt. I really enjoyed that, and I hope that you can see that the higher level concepts here are so applicable towards reverse engineering strategies and finding the right people to execute those strategies and to put them in a position to be successful with a vision, with clarity on where things are going, and also just recognizing that there's no finish line personally and professionally within an organization, designing that culture, not only with your family, with yourself, understanding what's most important and executing on that. I think this is so valuable. And, this is a real individual who has done tremendous things in real estate and otherwise. So there's so much that you can model, so much success that has left so many clues here for you to apply today. So I want to encourage you to re-listen to this podcast, this episode, this discussion, because there is so much gold. There's so much wisdom in this discussion that you can apply yourself. So I want to encourage you to re-listen to the show. Repetition is the mother of all skill. Ultimately, I'd love, and I think it would be very helpful for you to identify your top 3 or 1 or 2 distinctions or takeaways from this episode. What were those? Jot those down. Maybe it was a book that you're going to read. Maybe it is a concept that you'd like to employ. Maybe it is perhaps a lifestyle report card that you'd like to integrate within your own approach, personally, professionally, and all of those beautiful things. But identify those top 3 distinctions and have a discussion with someone else about what was it that you learned? What were your big takeaways? What were your big ahas from this episode? And I think that's where the rubber starts to meet the road in terms of putting you in a position to take massive action on what you learned today. Make this investment in yourself, the time that you took to listen to this episode, worthwhile by taking massive action. That's the biggest challenge or opportunity for you today, is to apply what you learned. Until next time, Elevate Nation, I just want to thank you so much for listening, and we will see you next time.
Thank you for listening to Elevate. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to elevate your results by taking immediate action on what you learned. For more, visit elevatepod.com.